Both Microsoft and Alphabet reporting third quarter earnings just moments ago. You can see the opposite reaction in those stocks right now. Joining us to break it down is CFRA Research Senior Equity Analyst Angelo Zino and Griffin Asset Management Portfolio Manager Doug Famigletti. Doug holds a large position in Microsoft and a small one in Alphabet and joins us for the first time here. So welcome to you, Doug. I will start with you, Doug. As an investor in these companies, what you think of the results that we've gotten so far?
Well, I mean, I think the Microsoft results were great. I mean, the Azure revenue growth, I mean, I think that, the estimates were more in the 26% range and coming in at 29%. So that's positive. It's no surprise to me that the stocks are moving the way that they are. Both are up a lot year to date. Alphabet up quite a bit more, 57, 58%. So coming in with a lot of expectations. I think both of them are pretty reasonably priced given their long-term growth. But I think the cloud business for Alphabet was a little disappointing. And given the fact that it's a much smaller percentage of their total revenue versus Microsoft, which is 22% of their revenues is Azure, whereas with Alphabet, it's more like 13, 14%. So I think growth there being disappointing on a relative basis is probably what's hitting the stock right now.
Okay. Angelo, do you see it the same way? Is that why we're seeing both of these names move in opposite directions, especially when you see Microsoft Azure up 29% and representing a re-acceleration of that business?
Yeah, no, I would completely agree with all of that. I mean, you kind of look at the numbers here. I mean, the 22% growth rate in terms of, Alphabet's cloud business is definitely a big disappointment, a deceleration from the 28% growth rate we saw in both Q1 and Q2 of this year. And, completely different than what we're seeing right now on the Microsoft side of things, which is that now finally starting to see an acceleration on the cloud side of things. I will say, as far as Alphabet is concerned, the positive here is the digital ad spend landscape is looking a lot healthier than I think most anticipated out there. You're looking at search growth of about 11%. You're looking at YouTube growth at 12%. So as far as the digital ad spend landscape, that does bode well also for Meta going into tomorrow night's results. And as we kind of go into 2024, there are still catalysts as far as the digital ad landscape is concerned, as far as kind of a major election out there and the Olympics as well. So I think that's something that investors should continue to be excited about as far as Alphabet is concerned with the sell-off here.
Doug, on Microsoft, what key question should investors really have about what drove Azure growth? I mean, I'm also noting commercial products and Dynamics products were pretty strong for Microsoft as well. And what might allow them to determine perhaps what made a difference between Microsoft and Google Cloud, and what might matter for Amazon?
Yeah, well, I think that given the two reports today, the number, I mean, you have a much smaller base at Alphabet for cloud, and it's been decelerating growth and lower than Azure, which is a much bigger percentage, a much bigger size. So market share gains, and of course, Amazon being the largest, Microsoft 2, and Google 3, is it market share gains, overall, growth in the market as a whole, but also, what type of market share is Microsoft stealing in the cloud or taking in the cloud? So.